I think that yesterday's commentary from Trump and all of this commentary about tariffs continues to make a very good story for metals. I actually want to add something to the thought process here. So yesterday, Trump said that tariffs are coming, but clearly there's been a kind of a sigh of relief from markets because tariffs are still coming, but they're not coming out fast. Like we've got some time between when we get some answers on that. Here's my opinion. That actually is good for metals because it's still an uncertainty that we all have in the back of our minds. What is Trump going to do? What are tariffs going to look like? We do know that that Trump is a volatile person. Whether you like him or dislike him, he comes in swinging with whatever he has to say. And so if he comes out and he says, I don't like the way the call went with so-and-so, and we're going to do this tariff, or like that can be around any corner. So the market simply having that uncertainty makes me think that could continue to be a bullish thing for metals, which benefit as an alternative to stocks for people who are uncertain and don't want to play that guessing game of what's going to happen next with tariffs. I think that's why gold and silver have been doing quite well recently, and why I think that they can continue to work and they can continue to do well. We have momentum here, right? Like this is the story that's working clearly. If you look at the NASDAQ, this is not we've had a nice rebound here recently. And perhaps, like you're saying, the bigger picture, I would agree, is bullish for this. Perhaps we get NVIDIA earnings and they're rock star. Okay, now we have a catalyst to potentially continue the story. But for me, the story right now that makes sense is we don't know what's coming with tariffs, and that uncertainty makes gold attractive. Are you still bullish on gold, and do you have any positions or willingness to buy gold or silver?
Yes, 100%, especially on gold. It seems like the guessing game that we have with Trump actually is the fuel for gold to go high, or maybe let's say most of these commodities, or let's say gold and silver and the other ones. So as there are going to be tariffs on the metals, obviously we are going to see higher prices. So I think yesterday I saw it was silver or something, it was up like 2%. So we can easily see that yes, it's going to push higher until we have the conclusion, and after that we are going to know that okay, if things are going to be like this, we are going to see a continuation of a trend or maybe a reversal. On my side, I can say it's actually overbought technically, but when we check fundamental, it seems like there's still enough room for the market to actually go higher, you see. But on my technical analysis, I wish if maybe there was going to be a reversal so that I can get in.
Yeah, I feel the same way with gold. If we do happen to get a larger pullback on gold, I'm definitely looking to potentially be a buyer, especially if you get down to this area of support, as long as the fundamental story still checks out. Speaking of that fundamental story, I know you and I, Kenzo, you're a fan of the heat map as well. This has changed a lot since we last looked at it together. Things have gotten they've gone really red where they used to be very blue. So specifically, today, this data has not yet updated, but it will soon. But it's still relevant because we missed retail sales last time around. We missed them again here today. Core CPI and CPI and PPI this week were all hotter than expected, coming in red, as indicating this is more concerning and risk off. Jobs data was pretty good, right? So you had unemployment claims came in a little better than expected. Unemployment rate was good. Jobs data, NFP, was a little bit of a miss, but when considering revisions, it was positive. But then JOLTS job openings missed expectations. So what we're doing here is we're summarizing, as you just mentioned, the overall kind of fundamental outlook here, and we have GDP missing expectations, services missing expectations. So the point is, we have mostly red on the screen here, which points us towards an environment where growth is not weak right now. Growth is still strong, but it's weaker than it was expected to be. So if we continue to see growth deteriorating, we could actually tilt into this environment, which is more stagflation, where you have inflation rising and growth faltering. Now, I wouldn't say that we're there at this time, but it is possible that you're seeing a bit of a shift where some of our growth metrics here, according to forecasts, are missing expectations. And following suit here today, we see retail sales coming in lower than expected. So yeah, I agree with you. I think that the environment technically for gold may have room to pull back, but the macro, the fundamental setup still seems like it has a good basis to continue a bullish move. If you'd like to see more of our free daily chart of the days, make sure to join our Telegram channel if you have not already joined. And if you are already in the Telegram channel, make sure to hit that thumbs up button to support our work. Also, quick reminder that if you're looking for free tools and free education in the trading space, head over to a1trading.com. You can check out our free technical, fundamental courses and much more.